What is going on, guys? It is Drew here with Invest Together, and today I'm going to be bringing you guys a video on how to get started in the stock market. In today's video, the things that we will be covering are how to open a trading account under a broker, how much money you should be investing, what to look for before making an investment, as well as how to manage your risks when investing. Now, I know that it may get redundant, but before I start the video, I do have to put out the disclaimer that I am not a financial advisor, so please do your own due diligence and understand each company that you are investing into, and always do further research besides just looking at my YouTube videos before investing into the market. Now, before we get started in today's video, I do want to say thank you guys so much for all the support that you guys have showed me on my last two videos. If you guys do enjoy the content, again, feel free to hit that subscribe button, as well as hit that like button if you like today's video. And if you guys are looking to go the extra mile, I do have a Discord server filled of like-minded people that are just looking to invest together. So if that is something that you guys are interested in, feel free to click that Discord link down in the bio below. And now that the boring part of the video is over, let's get into it and make investing easy. Now, first things first, when we are looking to get invested, obviously what we need to do is make an account where we can invest our money. So what I would highly recommend is that you do a lot of research, look at different brokers. The two that I would highly recommend for newcomers or new investors are Robinhood and Webull. Now, the thing that's nice about those two is that it's very, very simple to set up, and it's also very user-friendly, especially for new investors like I was saying. The only reason why I tell you guys to do a lot of research before choosing a broker is because different brokers have different incentives, and one of them may be more beneficial than the other. For each one of the brokers that I mentioned, it is pretty simple to get started on investing. It's just a simple sign-up process where you have to type in a bunch of your own information, and then following that, you'll have to type in a couple of different banking informations and then your identity information as well. One thing that I do want to mention, though, is that if you are below the age of 18, there is still ways to invest. The way to do that is to look up what custodial accounts or what brokers have custodial accounts and to go ahead and sign up through that. Now that your account is all set up, the next step is usually to deposit some money. But the real question is, how much money should you start with when getting into investing? I would highly recommend starting with a very, very small amount in order to get used to what the market is like, especially in these times where everything is so volatile. The reality of investing is 60% of all investors actually quit after 3 months, while 90% of investors quit after 6 months. There's only about 9% of people that can make an average return of 6% every year, and the other 1% are the people that are successful in the market. So as I was saying before, make sure to start small so that you're not weeded out like the rest of the investors. Now that we've gone over how to start an account as well as how much money to get started in investing, I think the next step would be how to find a good company to invest in. And if you guys are anything like me, you just started your account, you also just added money to your account, now you're sitting there watching the video waiting for me to tell you what company to buy in. While I may have companies that I am invested into or very confident in, that doesn't mean that you should also be. It is important to always do your own due diligence and research on a company before investing. That way, when that stock goes down from your original buy price, you can be very confident in the company that you are invested into. Moving forward, how do we even know what companies to research? In my opinion, you can never do too much research. There's always going to be opportunity in the market, whether that is simply a company being undervalued at the given time, or even if you're looking to invest long-term into a sector like electric vehicles or healthcare that you think is going to blow up over the next few years or so. There are plenty of ways to find out about new opportunity in the market, whether that's through Twitter or social media or word of mouth or even a YouTube video just like this. There will always be opportunity in the market, so what do you do when you find a company that you may like or that everybody is talking about? I want to give you guys an example of what it would look like if I had just heard about a company and I wanted to do some further research on that company to see if I wanted to invest in it. So, if I had just heard about Clover Health, the first thing that I would do is I would go right here and I would type in Clove to see what the value of the company is and what the share price is to know if I kind of want to invest in it, and then I'd look at the charts to see if it was worth it. So right here, I would say, okay, it's ran down. It might be consolidating around this level, so it might be a good buy, and I'm not going to buy at the top, essentially. So from there, then I would immediately go to the website that they have. So I would go to Clover Health and I would pull up their website. First of all, I'm just going to give it a quick briefing and see, okay, is it organized? Does it look good? Is it professional? Obviously, it does look very professional. They're a real company. It's not going to be a complete scam. So from there, my favorite thing to do when researching a company would be to always go through their ownership or their leadership, whoever is in charge of their company. So if I were to go here, I go to their members, trying to find, so if I can't find here, so then I would go Clover Health Board of Directors. Okay, so then I'm going to go right here, and then for each one of these people, I'm going to look up exactly who they are and what they did and the accomplishments that they've had in the past. The best companies in the world to invest in are the best ran companies in the world. For example, if you looked at Tesla and you saw hardworking Elon Musk was from the beginning, you're going to say, I can be confident in that investment. Not knowing where it will go, but I can be confident in the guy that's behind it. Same thing with things like Microsoft, Bill Gates. Anything that is a part of Bill Gates, you always want to invest in just because Bill Gates is a very successful dude. He's not going to let too many people down. Now, there's always a risk, so you have to take that into account as well. But it's just a little idea of what it looks like to kind of do that further research. So I go through the leadership team, then I'm going to do further research, obviously get to know what the company's about, get to know the sector that they're in. That is very, very important because you obviously want to be going for future growth sectors such as healthcare or EV or microgrids, clean energy, things of that nature. All of those are really good examples, and you want to be planning for the future and investing towards the future. Then when you have all of that down, you have a good sense of what the company does. You kind of want to do further research and look at your entry buy, and that's all when charting comes into play. I'm not going to give you guys an example of what that looks like today, but that'll be in future videos as far as what to look for when kind of trying to buy at a low and not trying to buy at the high point, like a lot of people are doing with other stocks. So that kind of gives you guys an idea of what I would do if I was in your guys' shoes, or if I was just looking into a company and looking to see if I wanted to kind of invest into it. There's a lot more things that you can look at as far as, definitely a lot more things that you can look at, such as profitability in the company, their net value, their net proceeds over the last year, 5 years, what their growth has been like over the year by year, what they're planning to do in the future. All those things are really, really good things to look for when you're looking into a company. Now, I know I just covered a lot of things, but the gist of what I was trying to say is that I always want to know the ins and outs of a company before I invest. The reasoning for that is because I want to have confidence that even if that share price, like I was saying, dips below what I originally bought at, I want to have confidence to average down. I want to have confidence that in the future, that company will be very successful, and I can have confidence in the investment that I had already made. Now, once we found a company that we really would like to invest in, the next step would to be actually invest. So what I personally like to do, and again, I'm not a financial advisor, so come up with your own strategies, do your own research about how you guys want to invest. I'm just giving you guys what I personally do when it comes to my investments. So what I would do is I want to start a starting position in that company, not something huge. I'm not going to all in my whole entire account. I want to start a starting position. That way, if it dips down, I'm confident to buy even lower and then average down, and that's going to make my investment a lot more successful. Even if that stock immediately goes up from when I buy it, I have confidence in averaging up because I did the right research, I know the company, and I'm confident that that will continue to go up and the value of the company will continue to go up. By having some of those buying strategies in place, that will help you a lot when it comes to managing your risk in the stock market. Even though you may do a lot of research and you have the right buying strategies and everything like that, you're not going to be right 100% of the time. Now, I personally hedge every single one of my bets by saying if the company does this or if the company starts going down this way, I'm going to leave my investment. Even if I lost money on that, I'm still going to leave the investment because it's not the company that I had originally invested in, or I found out something that I had not originally known. So I'm going to go ahead and leave that investment, whether it's profits or losses at that time. Having a lot of these strategies in place, it gives me an atmosphere to not be emotional when it comes to the stock market. That was one of the biggest things that I had to learn when I started to invest, because the moment I started losing $1 or $100 or even $1,000 or even $5,000, I would immediately want to exit my position and just secure that loss. But the reality of it is that just as fast as stocks can go down, they can also go up. So if I'm confident in my investment, why would I leave at a loss when I know that that is going to be a winner in the long term? I hope that with the steps that we covered in today's video that you guys have a better understanding of how to get started in the stock market. Our first step is to always open an account with a broker. Then from there, we want to decide how much we want to invest if we're going to start investing money at all. Then from there, we're going to look for a company to invest in and go over some of those due diligences and researches that we're going to look for when we're looking for a company. And then from there, we're going to decide how we're going to manage our risk in this given investment. I hope that by giving you guys examples of how I invest and how I manage my risk, it encouraged you guys to do the same, especially during times like this when the market is so volatile. I hope that those of you who have watched the video all the way through have not only learned something, but have also gained the motivation to actually learn how to invest in the stock market instead of just following what people say. After all, these are the tips that I received when I first joined the stock market. It's really important to remember these because, again, like I said, 60% of investors stop investing after 3 months, 90% of investors stop investing after 6 months. Let's all be a part of that 1% that is very successful in the market by learning and researching and doing our own due diligence in order to be successful. Once again, guys, I'm really happy that I could give you guys some of the tips and tricks that I use while investing in the stock market. If you guys did enjoy today's video or enjoy the content that I make in general, feel free to hit that like button as well as drop that subscribe. It does mean the world to me. And again, it keeps me motivated to keep these videos coming out. Other than that, guys, I'm going to be out. I appreciate you guys' time, and I appreciate you guys learning and wanting to invest in the stock market. This is Drew with Invest Together. Peace.